Thank you for joining us today, late in the evening. Before we start, we're just going to wait for a couple more minutes to allow for some of our other registered attendees to join us. In the meantime, please allow me to make a couple of housekeeping announcements. So first of all, this session will be recorded, and it will also be live streamed on YouTube. So if any of you would like to catch the session, or you have friends that may be interested in what we are talking about today, but they are not able to join, feel free to share the link to them after the call. I'll share over the YouTube link down in the chat below later on. And like I do want to keep this session interactive as well. So at any point during the webinar, if you have any questions that you'd like to ask about the topic to either of our speakers, please do post them using the Q&A function below. If you look at your webinar screen, at the bottom of your screen, you'll be able to see a Q&A button. So to ask your questions, you can just use the Q&A button, click on it, and you'll be able to post your questions. So we have a dedicated Q&A slot where the speakers will be answering the questions towards the end of the webinar. But what I'll do is I'll also be monitoring the Q&A very closely. So throughout the flow of the discussion, if the topic relates to your question, I'll also be posing it to the speakers as well. Yes, good. Thanks for the early question. I see there's a question from the floor. Yes, the video will be available to be shared with others as well. So this will be live stream on YouTube. The easiest way is to share the YouTube link to your friends or family after the call, which later midway through the webinar, I will get the link and I'll make sure it's posted in the chat so that you can actually use it and share it with your friends. And thanks for the question. It shows that the Q&A function is working. So please do send your questions in later on. I think we are about 1:05. So I think we are good to start. Before I start, maybe just do a quick sound check. Imran, Dr. Johan, yes, able to hear me? Can you just try saying hi to everyone just to make sure the sound is working?
Yeah, you're loud and clear, Nicholas. Thank you.
Great. Imran, are you okay? Because your video feed froze for a little bit. Just for context, I think also very appreciative for both our speakers. They just got off their flight and sort of taking their call right after they landed. And Imran, due to flight delays, actually taking the call from the airport. So I do apologize in advance if there's any technical difficulties. I'm sure we'll work things through. But I'm just going to I think we can start first. I think I'll do a quick introduction. I think Imran is probably still sorting out his audio. But in any case, once again, good evening, everyone. And thanks so much for joining us late in the evening. I believe it's 8 in Malaysia right now. I'm currently in Ireland, so it's a better timing for me. So let me introduce myself. I'm Nicholas from Pitchin. So I look after the commercial and product side of Pitchin. Long story short, Pitchin, we help companies raise funds. We are a fundraising platform that helps good companies find great investors or smart investors. And it's a really interesting topic that we will be discussing today, and it's a pleasure for me to host this session. I think just allow me to set a little bit of context before I pass it on and pose some questions to our esteemed panelists. I think ESG is not really a new word. For a long time it has always been a buzzword, right? I think buzzword for doing good or just worse. Sometimes people treat it as a regulatory box tick. But I think that has fundamentally shifted in recent years. I think part of it is driven by regulations, which is one of the key things that we are going to be talking about, exploring later today. But I think we're also seeing real life impact when it comes to climate disasters. I mean, I was quite shocked when we had a tornado in Malaysia, right? I think that is speaking towards the symptom of climate change that causing real world impact in Malaysia as well, and that's speaks to something real that we can feel. And I think that resonates with a lot of people in the space. And I think more importantly, and the focus of this session is really because I want to explore this a little bit further, because we are seeing a lot of shift from ESG or sustainability being a side project to it becoming a core investment thesis, right? I think globally we have sort of BlackRock, Larry Fink of BlackRock, I think has written an open letter telling the CEOs of the world that climate risk is an investment risk. It's not just philanthropy anymore. And that speaks real volume, coming from the largest asset manager in the world. And I think, of course, we have also firms like Bintang Capital. We have Dr. Johan with us today, that are building their entire strategy on sustainability. So it goes to show that ESG is no longer just a buzzword. It has evolved, and people are taking it seriously, and it has become an investment thesis for a lot of smart investors. Right. I think for today, what we'll be doing is that we will be unpacking this intersection between ESG and private equity. We'll be exploring a few things today. First of all, is understanding a bit more about the capital shift of investors funneling money into ESG companies, funding money into SRI investments, and how has that impacted sort of their view of portfolio companies. Whether we see any returns beyond just impact, but also bottom line impact as well. And also looking at how some of these companies are coping with it. And I think some companies may not be ready, and some probably more ready than others, but may need some help. So trying to understand a bit more down to earth scenario in terms of how companies are coping with it, and of course to look at the future as well. So with us today, we have two very esteemed panelists, and please allow me to introduce them. So first off, we have Dato Johan from Bintang Capital. Dato Johan is the CEO and founder of Bintang Capital. And a little bit about Bintang Capital Partners. They are Malaysia's first B Corp certified private equity firm, and also a signatory for the United Nations Principles for Responsible Investment, which is sort of a global movement that encourages asset owners and amongst other to actually take a stand when it comes to managing the portfolio and sort of making sure that their portfolio, the assets that they manage, are up to certain ESG standards. And Bintang Capital is also the first company in Southeast Asia to win the UN PRI Special Awards for Private Markets. I believe that was in 2024, right, Dr. Johan? And very importantly, and this is something that I know they embody, if you go to Dr. Johan's LinkedIn, the first thing you'll see is that it's their goal to create 150 B Corp certified portfolio companies by 2050. So we have Dr. Johan, and we also have Imran, who is the CEO and founder of Fuller Impact. So Fuller Impact is also a B Corp certified company. And what they do is they help businesses translate ESG goals into measurable business performance through education, advisory, and technology. So I think a lot of what they do emphasizes on sort of practical implementation rather than just sort of fluff buzzword, but emphasizing on how to help businesses translate that into practical impact that they can actually use within their company. And I think to date, Fuller Impact has helped more than 5,000 alumni through their training programs, as well as 700 companies to sort of develop or create their sustainability roadmap. Thank you, Dr. Johan and Imran, for joining us today. So to get things started, I want to start by looking at the trend that we are seeing, right? The capital shift. So as I mentioned earlier, we are seeing a shift in capital when it comes to investors allocating money into ESG assets. And I think my first question will be to you, Dr. Johan. So Bintang Capital, as we all know, You guys are one of the earliest investors in the region to really fully embrace sustainable investments. And I think to the extent of measuring your own fund's impact, at least from what I can see on your website. Maybe can you just shed some light as to what's driving this motivation, either from yourself or Bintang Capital to really embrace SRI to this extent?
Thanks, Nicholas, for the really very kind introduction. Call me Johan.
Okay.
I think when you're talking about any company's motivation for doing anything, it's very difficult to divorce that motivation from the founder's own experience. And I guess I was very privileged to grow up in a household where my family and I would go out for dinner, my younger brother, my father, and my mother, and there would be random strangers who would come up to our dinner table and they would pull my younger brother and I aside, and they would point to my father and say, "Do you know that if it wasn't for your father, I wouldn't be alive today?" Right? Or older folk would come up to our dinner table and similarly do the same thing. They'd say to my younger brother and I, "If it wasn't for your father, I would not have lived long enough to meet my grandchildren." Right? So I grew up with this very profound realization that actually, for many of us, our work really defines a very big part of our identity, right? And in my sort of early 20s, I was lucky enough to stumble upon the world of private equity when I was working in London. I love the work. To be very honest with you, it's exhilarating work. You get to meet some really visionary founders, very inspiring people with big ideas. They're running companies that are very disruptive in their industries. And you get a real variety of looking at lots of different types of companies as well, operating in lots of different industries. But one thing I realized as a very junior person in private equity is that we were doing buyouts at that time, and I would look at companies' profit and loss accounts, and I would be tasked to go and find something called cost synergies. And for many operators in the private equity space, the words cost synergies are really a euphemism for what is essentially cost cutting that involves jobs, right? And being junior, I guess I didn't just look at the numbers on the spreadsheet. I was ultimately also the person that would end up having to speak to people who were being made redundant. And that's when I realized the numbers on a spreadsheet weren't just numbers on a spreadsheet, right? It involved, real people with families, with lives, and there was a real human cost actually to when, you were making cost synergies happen, right? And this struck me as something very inequitable, because these were people for whom their blood, sweat, and toil had built these companies in the first place, and when it came to the crunch, they were the first people being let go. And I just felt to myself that this was very inconsistent with my childhood experience growing up, where people would point to my dad and say, he saved my life. My worry is that ultimately, when I have children of my own, people would point to me when I and my family are out at dinner and say, your father took over the company that I used to work for and I lost my job. And I didn't think that this was something that I really wanted to leave behind as a legacy, as a reputational legacy to my children as I got older. So one of Bintang's core purposes is really to try and find a better way of making investments in such a way that people were treated equitably, and there would be dignity in the way that we handle, resources, whether that's people or the planet. And ultimately, I think it comes back down to what you mentioned earlier, that we need to find a better way because businesses need to find a way to internalize a lot of externalities. We've imposed a lot of cost on the environment. We've imposed a lot of cost on society when we do business. And there are lots of very smart investors, as you put it earlier in the introduction. But I think we also need investors that have a heart, and that's really what drives, I think, Bintang's passion in trying to make investments, in a better way, I suppose.
Yeah. Thanks for sharing that story, Johan. And I can't agree enough, right? I think yes, I've been talking about ESG from the perspective of just numbers and regulations, but you're right. It should come from the heart, right? It's really being able to appreciate the impact that the actions that we take have on others as an individual, as a company, and as an investor, supporting different causes, different companies with different causes. Thanks for sharing that, Johan. Imran, I wanted to get some perspective from you as well, from some on the ground feedback. I think I think having heard what Johan has said, companies actions that they take actually have impact in people's life and the place that we live in. And Imran, you've worked with a lot of companies, hundreds and potentially thousands of them. Um, what's your take on this, right? I think a lot of these companies, I assume they have started, or maybe the question is, have they started to approach it from this perspective, right? Being able to internalize some of the impact that their business decisions would make, and whether is it something that they are getting pressure from their stakeholders, or is it something that comes from within? Not sure if Imran can you shed some light as to what's the mood on the ground when it comes to companies that you work with.
Absolutely. Yeah, thanks for that, Nicholas. I think it really lines up pretty well with what Dr. Johan was mentioning just now. So in terms of the current movements, what we're seeing in terms of essentially if we could scope it in terms of are the people actually feeling the pressure from the investors I can see this through the years. It has definitely shifted. The pressure is real. I mean, like what you mentioned just now, people are also starting to realize the whole climate change and everything is real. And of course, the demands as well. It's coming from multiple directions, let's put it that way. So for the larger corporations, other than the influences that's coming from, let's say, Malaysia, Bursa is imposing on that. But it's also coming from the pressures of the boards, investors, and also demands for the disclosures. So if we were on the SMEs, which is often is rather on the indirect when it comes to this, they are part of the supply chain and where the top company has the ESG requirements. So the pressure trickles down, and this is where people are having that whole the need or the shift of the sentiment. So 2 years ago, people could say ESG is just a checklist, and now they are how can we use this to strengthen our business? So this is really encouraging, because once they're linking the sustainability to competitiveness, so momentum will follow through from that. So in terms of the readiness, when we look at that, some of the companies may have the strong intent, but limited amount of data or system to actually cope with that. But others might have the data, but not having a clear strategy. That's where we at Fuller, this is where we come in, helping the assessment where they are, identifying the gaps, and then design in terms of practical steps towards the ESG maturity, so that investors like Johan is looking for the evidence in terms of the governance, measurable impact, and transparency. Would be able to have the visibility of that. So our job is to help companies build evidence base so that when investors look at them, they're not just compliant, they're also investment ready, essentially.
Okay, that's good. And I mean, so it seems like companies are starting to feel the pressure. If I hear correctly, a lot of it comes from investors, from owners, the owners of the company, investors, and also board for companies that are big enough to have set up a board. And I think probably one thing I would want to get more insights from both Johan and Imran would be, I think we've heard that investors are starting to care about ESG when it comes to their companies that they invest in. Companies are also taking notice of it. And this is more of a twofold questions, right? I think from Johan, you actively look out for companies that you want to invest in that fulfills your mandate of creating impact. And I know you have a few pillars that you guys focus on. I think from your perspective as an investor, what is it that you look for when it comes to selecting companies to invest in? And I know the framework that you guys have developed was one of the main reasons you guys were recognized, won the award in 2024. So could you share some of the secrets as to what are you looking out for when it comes to companies that you invest in? And probably from Imran, from a counterpoint, not say counterpoint, but from a more on the ground perspective, like you mentioned earlier that some companies are not that ready, right? So like based on perhaps Johan's point of view, would like to get some insights from you as to, you know, more concretely, when it comes to companies that you've worked with, how far are they in terms of meeting what investors like Bintang Capital and what Johan looks for? Maybe we'll start with Johan.
Thanks, Nicholas. That's a really good question. Although I'm not sure I'd say it's a secret in terms of what we look for, because we're quite open about it. I think when we're dealing with businesses that we want to invest in, one of the core considerations that we need to bear in mind are the degree of buy-in that we can get from the founders or the entrepreneurs, right? I think it's a lot harder to roll the boulder up the mountain if the entrepreneurs themselves don't buy into the idea that sustainability or impact are good things for the business. And of course, as an investor, it's a lot easier to execute an impact strategy if you're preaching to the converted, so to speak, right? So it's a lot easier to work with people that have a very high degree of buy-in. I think another very important aspect of what we look for is the business itself has to be at the right stage of its life cycle for us to really be seriously able to consider doing things like impact or embedding impact into this model, right? So what do I mean by the right stage of their life cycle? I think when we talk about readiness, for instance, companies that are very early on in their life cycle, really startup type companies, the priorities that they would have are really to keep the lights on, right? Because they are very constrained by resource. They would really need to try and find a pathway to profitability before they start doing anything else, right? So priority-wise, I think for founders who are at that stage of their entrepreneurial journey, unless the business itself happens to be an impact business, it's very, very unlikely that they will want to proactively or voluntarily look at things like ESG and impact as a matter of a priority at that point in time. The other thing that I think is key is that some of these the implementation of some of these things requires that you have resources available, right? And again, I think if you're too early on the corporate journey, resource becomes a really big challenge for them, right? And then finally, I think the last part in terms of getting buy-in is really being able to demonstrate that there are returns on impact available, where if an entrepreneur or founder were to implement certain things, they would have benefits like, for instance, being able to penetrate into new markets. They would have a better lens in terms of assessing their risk, whether that's social risk or climate risk or brand risk. And at the same time, I think it's also about being able to position the business so that they can manage their resources better. Say, for instance, retain employees or attract employees and talent, right? So I think, I think those are some of the things that we would look for before we make an investment. It's a non-negotiable thing for Bintang because for us, the moment you take $1 in investment, the expectation is that you will become an impact business. There's a 2-year runway, in fact, for us to ensure that you become B Corp certified, for example. But we also recognize, I think, that a lot of businesses need help. They need guidance. And typically what we do is we do second members of the Bintang team for at least a period of about a year into the business to help them walk along that journey, right? So maybe that gives you a little sense for how we do it and why we choose certain types of companies.
I think that's interesting. So if I hear you correctly, and allow me to touch on the point a little bit more. So of course, buying is important because there's no point getting someone that does not believe in what sort of doing good and sort of creating impact. But I think interesting point you mentioned is you guys look for a balance of if I were to put it, ROI and both ROIs, return on investments and return on impact, if I understand it correctly. And to the extent of needing to be able to measure and track the impact that they create. Right.
Right. And I think it's a very important point because we're juggling also the needs and requirements of our investors, right? So people think that the dollar comes from Bintang. It really doesn't. We have investors that stand behind us and they believe in the work that we're doing. But for a lot of them, there is a spectrum in terms of where they lie. Some prioritize returns. Others are very passionate about impact. And we have to find the right balance to strike with all our investors, right? So ultimately, I think what we're trying to do is we're trying to invest in impactful businesses, but we're also trying to invest in businesses that will give our investors a good return, right?
Okay. Thanks for that, Johan. Imran, I think to you, I think probably not going to be a easy answer, but I think so like essentially like companies that like Bintang looks for would be those that can balance between ROI, being at the right stage of the business to be able to deliver profits, deliver return, but also able to measure their own impact that that they are creating. I think amongst the people that companies that you work with, how many of them are ready to sort of take on that challenge? I know you mentioned earlier data is a key issues, and not sure if that would factor into measuring a return on impact, but so what's your take, right? How ready are they? Are they to take up this challenge from investors like Bintang?
I would put it in a sense that when it comes into the readiness, for example, I mean like what John mentioned, it is essentially as part of the whole journey. So there's actually two sides of it, because for us, us at Fuller itself, if I could share a little bit in terms of our journey, when we first set up the whole company, we always had this thought in mind: we need to be walking the talk. This is very important since day one. So what we did was we have the sustainability as a purpose engraved even within our M&A. When we registered the company. So this is where we knew we want to go into the whole B Corp certification, so that the governance, people, practices, and the impact processes are externally verified as well. So in terms of the model, connecting the whole learning, consulting, the digital execution and everything. So we don't just looking at advising, but also applying the same framework internally as well. So, when investors are evaluating, they're not just looking at the financial returns. This is where exactly like what John was mentioning just now, they're going to be looking at the scalability, transparency, and the long-term impact as well. How is it going to be? So the alignment would give in terms of the, strengthening a relationship and the mission-driven for the mission-driven investors as well. So just coming through the experience, going through the whole process of a big corp itself, it's sort of it helps to give that kind of guiding experience. So what Johan was mentioning just now, to be able to get that whole journey and understanding what are the potential gaps and things like that is actually not just really, it's not really just ticking a box. It's actually the right thing to do. I know I do understand in terms of the resources. I mean, I just came back from IDEX. So it was sitting around together with a lot of startups, and everybody was asking me hey, how is this thing going about, or this sustainability? Because there's investors like Bintang. There's also the matching potential coming from SC, which is a very highly beneficial. So in terms of the interests are quite a lot there. And sometimes it's just a matter of really putting the mind into hey, actually what you're doing is already it's really about really identifying it. And I feel it's really worth of that time and effort. Sometimes you just have to carve up that time, especially for on the earlier stage of a startup, to be able to do that. So some may have the luxury or a earlier stage of an awareness when it comes into the ideation process. But for some, it's never too late. It's definitely a journey that could be hopped into.
Yeah, and probably also to put you on the spot a little bit, right, Imran, because Fuller Impact is right now raising funds as well on pitching. So how would you stack up? I know stage wise probably not so much because you guys are at the earlier stage of growth. But as to some of the expectations that Johan has shared. And potentially some of the broader ESG expectation, how would Fuller stack up to some of these expectations as a company that you mentioned has embodied impact from the start of even from the beginning, and went through B Corp, like how would you guys stack up against some of the expectations set by some of the ESG impact investors?
I think like again, like having that kind of exposure and like work that we're doing, and we tend to have this conversation quite closely. And in fact, I just had like a multiple, what we call it, like a speed speed pitching, speed dating kind of thing with among like investors as well. And it's really good to be able to see the feedbacks, because like on one hand, of course, like we're talking about financials and things like that, but like at the same time, we're able to show in terms of the impacts that we are actually creating on the individual, number one. And then like on the second part is actually looking on the organizational perspective. How is it going to be able to impact? Because like directly from us, we won't be able to like straight away, but like within the organization, through that execution, then we'll be able to see in terms of differences. So like, we were feeling like, after the rigorous conversation that I've had over the last 2 days, I think like kind of like gave us a pretty good feel of like how this whole thing that we've been lining up for the years are actually like showing the productivity, and there's quite a positive feedbacks coming from that.
Okay, that's good. I know you guys have also sort of published your sustainability ROI, at least your goal as well, which is on your campaign page if anyone wants to learn more about it. But I would like to sort of transition a little bit to the next section of our panel today. And I really like what Imran mentioned earlier, which I think resonates with me as well. At least because we pitching, we also work with a lot of companies, and as you mentioned as well, Imran, the government has co-investment schemes for companies that are creating impact. It's 1 to 2 co-investment scheme from MySafe, which is pretty good, right? If you think about it. And I do realize that actually a lot of them they do create impact in business and what they do. It's just sometimes they don't put their mind to it. And going through a proper process, a proper framework, I think we mentioned about B Corp, does help to put things into perspective. And I think also what some of these standards are very, very important to provide a guide for companies that are trying to get into the space, or investors trying to sort of navigate this space. And I think what Fuller does is also to help bridge another layer from some of these frameworks to practical sort of implementations that they can actually take home and use. So I would like to tackle this in sort of a few layers. I think we'll start with sort of some of the frameworks that are out there that could be helpful for investors or even potentially issuers that are trying to incorporate sustainability or at least internalize sustainability for themselves. And probably the question is to Johan, since you've been around a lot, and when it comes to standards, when it comes to all this ESG, SRI, there are a lot of very big words. I think even in my introduction, there's a very long UNPRI, which and there are more, right? There's taxonomies, there's reporting standards. There are a lot of different concepts being thrown around when it comes to sustainable investing. And I think for a lot of people, it could be very overwhelming. I know when I first started to study the space, it's really a mouthful to just go through all of it. But maybe I'm not sure if you are able to, since you've been in the space for a long time and you've also been very attuned to the developments as well, could you help to give some of our audience a very quick lay of the land as to what are some of the key concepts, key things that investors should be taking note of, and also beyond the standards, what exactly is it that on the ground as an investor, what is it that you look for when it comes to applying some of these standards or methodologies?
Sure, Nicholas. I think in framing the question, it probably helps us to go back to first principles and really go back to the basics, right? And I think one of the beliefs that we have at Bintang is that whatever standard we want to encourage our portfolio companies to take on, it shouldn't be overly burdensome on them, right? We have to bear in mind that the reasons these businesses exist is that they're providing a valuable service or they're providing a valuable product to society. And ultimately, that's where the focus of the business should be. From my perspective, when we were trying to figure out what standard would work well for our portfolio companies, there were a few criteria, I guess, that we were trying to solve for, right? So one, for example, is that it should be ideally an internationally recognizable standard, right?
Okay.
So one that is accepted globally and that is applied uniformly across the world. Excuse me. And another thing that we also were very mindful of trying to do is we wanted to find a standard that would allow for inclusivity, meaning that it's not just geared towards one industry or one group of industries, but it theoretically could be applicable to all industries, right? And then the third requirement that we had is that the standard should ideally be administered by a third party. So it shouldn't be Bintang saying that, this company is good and we self-certify that company, but it should be done by an independent third party where we are unable to influence the outcome of whether that company is going to be certified or not. And then ultimately, the fourth criteria that we looked for is that we wanted a standard which would allow for comparability. So we wanted to say, for example, get a portfolio company in Bintang certified, and we would then be able to compare that company against its peer, maybe in Europe or in the US or in Africa, etc., and then be able to see how our portfolio company compares against those companies, right? So this is where I think ultimately, we did a lot of research. We looked at a lot of different certifications, including things like the butterfly mark, the seafood mark. We looked at GRI, we looked at quite a number of these different measurements and certifications. And ultimately, we found that B Corp was the one that satisfied our requirement the easiest, the best.
Okay.
Yeah? And I think it also speaks to the stage of companies that we're investing in. These are not large companies that are listed on the Bursa with billions of ringgit in market cap and huge amounts of resources. These are typically companies that are, towards the smaller end, the medium-sized end of companies. And ultimately, we also had to figure out what would be, a methodology that would be stomachable, I suppose, by these companies, right? And we found that B Corp actually fits the bill quite nicely, right? So, I like what, Irwan said earlier, because, one of the advantages of us having been through the certification process as well is that we know how painful that certification process is. So we're not telling them to do something that we've not done ourselves. But B, we also know where the choke points are, and we could potentially help them to get certified and to make the journey a lot smoother. Right? So hopefully that gives you a sense of how we've made a selection in terms of the regulation or standard that we wanted to use.
Okay, that's great. And if I hear you correctly, I do agree, right? Because when it comes to ESG or standards, there isn't a lot out there for private equity or smaller private companies. A lot of them are for large companies, which makes sense because they cause the largest impact. And if I'm hearing you correct, Johan, is basically if there's an investor or someone that is new to the space trying to get holding into something, B Corp would be a good place to start delving into getting something a bit more concrete. Yes, John.
I love that, Nicholas. I mean, so much of what we do is about readiness. And, ultimately, our aspiration is that one day for our portfolio companies to be billion ringgit companies, right? We want these companies to grow and flourish and become big companies. But they have to start their journey somewhere. And I think expecting a small or medium-sized company to do what the billion ringgit companies are doing is patently unrealistic. It's never going to happen.
That's right.
Right? So I think it's a very nice way to ease them into doing this and potentially also getting them to enjoy, I think, the process where they find that there's actually value when they are able to get the B Corp certification, right? And I think, we can talk a little bit more later about, what those values or appreciations are on their part, on the entrepreneur's part, to motivate them to do B Corp.
Okay. All right. Thanks, John. And Imran, from I wanted to post sort of similar, but from probably a broader perspective as well. I think for companies, because a lot of what they do is not just to get investors, right? It's also being able to do business in the market that they operate in, And it's not just sort of investing standards or reporting standards that are out there that are affecting them, but potentially there are also other developments when it comes to regulations that could be very relevant to them. And I mean, from your perspective, what are some of those key standards or key regulations that companies need to be aware of, besides investing standards or reporting standards that are out there?
Absolutely, yeah. I think that's where the magic pill that everybody is looking for, right? Especially for the businesses. All the alphabet soups that everybody is trying to figure throughout. I think well, from how we take it is that there's normally we actually break it down into like three big areas that we focus on. The requirements may vary based on the business and the stages of the business, of course. So number one, look in terms of of course the most common one that we're aware of, in terms of the disclosure and reporting. Be it if you're on the Bursa or Philippine Stock Exchange or SGX. Now there's the whole NSRF in Malaysia and IFRS, so on and so forth, because those are essentially requirements that is directly imposed to you if you're within that group of companies. And then the second part is to look and understand in terms of the taxonomies, like how banks would actually classify the green or sustainable activities for financing. So by understanding that, you would be able to position yourself when at the moment of requirements. And the third one is to look in terms of for the procurement and supply chain criteria. So looking at the clients and the MNCs embedding ESG clauses within the contracts. So of course, at the end of the day, we want to position ourselves at the best way for us to be able to penetrate. Be it if you're doing exports to Europe, and then you would actually need to have the understanding of the CBAM, for example. And then this I do understand when we bring this kind of topic, it can sound rather intimidating, but reality is regulations are actually setting the directions and not pushing business away or punishing in that manner. So we always encourage when it comes into businesses to be clear on what would be the key drivers for them to embark into sustainability. So go back to the basic, ask with a whole big why, right? So are you a supplier or looking for financing, or do you have a specific regulations that you need to follow? So this would actually help them to focus on the right area. And if you manage to align it earlier at the earlier stage, then you'll be able to get an easier access when it comes into capital, in terms of new market and long-term trust as well. So these are the three important areas. At least it helps to narrow down, because I can't really pinpoint exactly what, but at least if you could position yourself within one of these three, or maybe more than one, then you would be able to at least narrow it down what are the areas to focus on.
Yeah, and maybe Imran just maybe help me to also frame it for the audience. So if I hear correctly, of course, there's one of it is the reporting framework. So yeah, there are a lot of alphabet soups that we talk about, but one of it is the NFRS and IFRS. Those are all reporting standards, right? So one of which is the reporting standards, depending on what group of companies you are in. Second, I think you mentioned is on supply chain, right? Making sure supply chain is ESG friendly. And especially if we are working with countries that have regulations on that, right? What was the third one again? Sorry, Imran, if it help
to look at the taxonomy, basically.
Okay.
So in the case of Malaysia, Bank Negara, national bank, they would actually come up in terms of the requirements and the banks. So this is actually another question that normally people come, what would the bank want from us? I think in Johan's case, what does Johan want from us, or what?
Okay.
So of course, investment is one aspect when it comes into banking, financing facilities. I remember on the earlier days of us running this, they were banks that we were talking to. They were hey, actually we have 20 billion to release, and we have barely touching like one because like people are not able to position. So like where like opportunities are actually there, but like really have to position. So like even though different banks may have different requirements, but like if you look at the whole national part of it, then you would be able to at least like win 50-60% of the battle, and the rest of it like it's not going to vary as much. But yeah.
Yeah. Okay, I think that's great. So if I allow me to recap, so I think it basically boils down to three areas from a perspective. One is the reporting standards, depending on which group of companies you're in. Are you a PLC? Are you a unlisted company, but large ones, or whichever sector you're in? Reporting is important. Number two would be when it comes to your supply chain. If you're serving a large supply chain, you need to make sure that you're able to report your things like carbon emission, your all those well, and be within the limit that of the companies or the country that you are serving. And thirdly is taxonomies. I think just to break it down to our audience, essentially it's basically breaking down different types of business activities or business model and sort of relating it to what it means to be ESG in those activities, right? So looking at your own activities, understanding it, and see how it relates to what investors or what your stakeholders are looking for, whether it's banks, investors, so that you can speak the same language and can help investors like Johan to compare against different businesses that are within the same activity. So these are the three main areas that companies need to look out for when it comes to applying ESG. I think before I go into the next part, which is on future outlook, I do want to spend some time to look into some of the questions that we have from our audience. I think we have a number of interesting ones. One of which is from Rohit, and this is to Johan, asking about the hurdle rate for Bintang to invest. I think probably Bintang, if I understand correctly, only invest in good, not good per se, but ESG companies. So I'm not sure if you're able to compare it amongst your portfolio company, or perhaps from other companies that you may have invested in the past. What's the hurdle rate like for ESG companies and other companies? Are they the same? Is there some allowance?
Sure, that's a really loaded question actually, because if you think about the spectrum of impact investors, there's quite a big spectrum, right? There are guys that are out there that are impact only. So in a fashion, they basically are prepared to take lower rates of return in exchange for greater impact, right? And there are guys out there obviously who I would say probably token in terms of impact. So the focus is still very much on commercial rates of return. We're probably somewhere in between the two, right? So we try to strike a balance. We do know that impact takes time and requires a bit of patience. And because of that, if you think about the IRR that you're able to generate, it may potentially involve a longer holding period. And if there is a longer holding period, you stretch out the holding period, typically the IRR starts to trail off a little bit, right? So I would say that our expected returns are probably in the mid to high teen range. We do have an aspirational 20% and above IRR rate, right? And that's really to help us benchmark ourselves against more conventional players. But there is a recognition that if we need to hold the company for a bit longer, there will be a little bit of an impact to the IRR. Right?
Okay, I understand. But I think also worth noting, like what Johan has mentioned, is that there's a spectrum of investors, right? I think what Bintang looks for is probably different from full impact investors that is really there for the impact versus sort of others.
Right.
So thanks for that.
That's right. That's where you really start going into the sort of more charitable or philanthropic kind of spectrum, right? Where it's just 100% impact. But it's a very good question by Rohit. I get asked that question a lot. If I had $1 every time I got asked it, I'd be a multi-billionaire by now. So thank you.
Yes. Okay. Thanks for that, Johan. And I think since we're talking on the topic of investing in sort of ESG companies, right? I think there's another question by Rohit when it comes to assessing companies that are there's no product per se, like Fuller, for example. And maybe I'll get Imran to talk about it from your own perspective first, right? How would an investor assess an opportunity like Fuller, where there isn't really much product, more of a service? Although I do know you guys are launching your own SaaS product soon. So how should an investor go about, or how would you pitch yourself to an angel investor? I mean, let me put the questions that way, right? What should they look out for from a business standpoint and potentially also from an impact standpoint?
Yeah, I mean, we've invested in companies that aren't, goods producing, products producing in the traditional sense. They are essentially service providers, right? So we've made an investment in the impact space in a care homes provider for elder folk, right? We've also made an investment in a wellness business that runs a chain of yoga, reformer Pilates studios across Malaysia and Singapore. Right. So, I think we're quite familiar with services-oriented businesses, very much like Imran's business. And I think the sort of criteria that we apply are really no different from the criteria we'd apply to a business that produces physical goods. So we would look for, the company's ethos, what drives the founder. I think that's a very, very important aspect of it. We look at how much traction they've had in terms of building a customer base, being able to generate revenue. We are growth investors, so we look for profitability. We look very, very heavily at unit economics and how the business will generate more product synergies or service synergies as the business scales. Right. So I think those are the factors that we would look at. And ultimately, when we're looking at investing in any business, it's about exit prospects. How will that business ultimately generate a profitable exit for our investors, right? Is that going to be via IPO? Is it going to be via trade sale? Will there be other financial investors potentially that would want to come in and take over the business and do a buyout on the business, right? So I think those are maybe the main factors that we look for in any business, whether it's a service business or a product-driven business.
Okay. I think that's fair. So it's quite similar because business are still business, right? And maybe Imran, just put you on the spot again. So like, because the question is also talking about Fuller, right? So like knowing what Johan has said, some of the things that investors look for. What's your 1 minute pitch to angel investors that about you guys? Like, why should they invest in you guys?
Like I'm not gonna do a 1 minute pitch right now, but like it's definitely a matter of the differentiator, right? Because like when it comes into this, we're providing services, and essentially like some people would be able to say like, hey, we're actually like we could just like Google in terms of like the answers and things like that. But like it's also a matter of like building up your specific niche. So like say for example, like for Thriller, when we started off, we were focusing on like at that point of time, a lot of knowledge were coming from America and from Europe, but like during that time, localization is not a big thing. So that's how we actually first started. So global knowledge, local impact, that's what we're pushing forward for. So any of the subject matter experts and everything that we bring in, that we created. So even like our content wise, we have our own e-learning platform that really focus only on sustainability related topics. So ESG, circular economy, so on and so forth. So that's like number one. And from there, we actually grew further. So like we actually built up, we had our consulting arm to help organizations from understanding and into the execution. So at that point of time, all the works that we have built, the workbooks, the structure, the flow, so on and so forth, we have actually converted it into the platform, into a SaaS solution, which is like to also essentially, because like we do understand like for sustainability to happen, it should be able to be affordable as well. And this is where like we're building this with a thought in mind. It's not about as like disrupting just per se, but like we want to also be able to have a solution that we would be able to collaborate a bit like with the private, direct users, or even governments, or even like among the consultants out there as well. So we want to collaborate because like we understand if we could provide something that would reduce the time for the consulting works to be done in terms of building up strategy and things like that. And that is a solution that we have in mind, that we would be able to collaborate with anybody out there with the ecosystem essentially. So that like, just imagine if we could reduce the time by 50%, then like, we would be able to achieve like a lot more companies to start embarking sustainability. So like, that's the whole idea.
And I think that's important also. I think just to Rohit's question, I think probably one of the key points, key takeaway from that is that if I understand correctly, I think yes, Fuller started as more of an education a resource, but I think has evolved way beyond that. Right now, to be able to work and from getting feedback from the market to be able to work with different stakeholders to serve their needs, from consultancies, governments, beyond just training and education. We have one more question that I want to touch on, and I'll move back to probably just one last question for each of the panelists, and we may slightly go beyond our scheduled time, probably by 5 to 10 minutes. Hopefully that's okay with everyone. But one last question, and probably I'll get Imran you to take this. So we have a company that is in project management consultancy, and they are just starting to they're just beginning their ESG journey, right? So they are still at the planning, they're at the training stage, and more importantly, I think trying to understand how ESG relates to them and how they can actually apply it to their operations and projects. So what would be the first concrete step, I think, from your perspective, your advice to them, for them to be able to embark on this journey? And also, how can they measure the ROI from the ESG efforts that they are going to be undertaking? Over to you, Imran. It's a hopefully yes. Can you hear? Yes. You froze
Yes,
for a little bit, but
absolutely.
it's fine.
So like
That's fine. We can
of
hear you
course,
now.
like okay, brilliant. Yeah. Sorry. Okay. So yeah. So when it comes into this, like for the project management and everything, is like you know, establishing the baseline is definitely something that is very, very important. Again, like we've seen in a lot of cases, a lot of conversations, people are just like trying to how will we say this? Like of course, like you know, having a reference is a good thing, but like at the same time, it's also start looking deep down in terms of like the significance of the areas that you will want to go in essentially. So like from that in terms of comparison, because like as what I mentioned just now, you know, it's about like ensuring in terms of like making a full assessment, and then the key areas that really matters to you is going to be able to help you you know, break it down and segment a priority. So like what are the areas that you want to prioritize, and you would be able to analyze it and looking at the risk factors. So for example, if you're like, you know, if you're looking at energy as a concern, how could you amortize in terms of long-term investments and will make sense through the cost reduction, for example. So like, you know, these are the areas that you could look into when it comes into to make it work. But of course, like, you know, while you're understanding internally, it's also about like understanding in terms of like the supply chain, the value chain of the business as well. How could it be impacting like from one end to the other? So like, you know, it's really about dissecting and like understanding it on the whole aspect of it, and that would be able to help you on a better note. Yeah.
Okay. So if I understand correctly, it's first of all is to understand or do a bit of soul searching to see what's important for the company, so that you can actually prioritize and deep dive into further. And number two is really looking at the whole supply chain to identify potential risk that to mitigate, right? So one is priorities and one is risk. And any resources or any tools that Imran you feel could be helpful for them to get started, anything that they can get from yes. Okay. Yeah. So you can what the website, I think is what Fuller Impact, Fuller 360 at you can go there to get some resources. I know there are some free courses as well, free resources that they can sign up for as well, to get started.
Yeah. And then touch of
Okay.
like happy to share a bit more.
Yeah. Probably you can reach out to Imran after this to get those resources. Okay, I'm going to move back to our a few more questions just to close things up, and I think the final portion is really to look at our future outlook and also the role Bintang and Fuller is going to be playing within this ecosystem and within this future as well. So the question will be for both, and we'll we'll start with Johan later on. But first of all, is where do you think SRI, sustainable investing, is heading towards in the future? What are some of the key trends driving this? And I think more importantly, how would you see Bintang's role in this space? And I know a lot of emphasis is in creating 150 B Corp certified companies. So maybe a little bit on how are you guys going to be, what's the strategy to get there?
Good. I think when we talk about capital being drawn into a particular area, we've got to be cognizant of what factors are creating that demand for capital in that space, right? So one of the things that I think is guiding how capital flows globally into impact, for instance, is really the fact that there are these underlying mega trends that are affecting all of us. You mentioned earlier when we were introducing ourselves about the effects of climate change and the fact that we've seen now hurricanes in Malaysia, right? We're seeing increased flooding, say, for instance, right? And this has knock-on effects. It has effects on people's lives. It also has effects on our food production capabilities, right? Because these are very disruptive to crops. If we look at demographics, which is another mega trend that's playing out right now globally, we're seeing rapidly aging societies, actually. And the statistics are actually quite scary in that by 2060, in Malaysia, for instance, 1 in 5 people will be aged over 65. And that's going to create very different demands on our economy, right? In terms of care, pharmaceuticals, living arrangements, etc. And we're also seeing a shrinking of the younger population at the same time, right? So that has productive implications in terms of our country's ability to meet the requirements and demands for goods and services. So when we think about investments and we think about the fact that there's a massive amount of capital potentially pouring into these areas, it's because allocators of capital realize that there is going to be a demand that has to be met in this particular area, right? Whether that demand is for climate adaptation, mitigation, or circularity solutions, or whether it is to care for an elderly population, or whether it's to care for really any sort of other social issue that we potentially can see coming from what's going on right now in the world. So I think in that sense, when we look at more advanced economies or economies that are further along the curve in terms of what's going on demographically, economically, we look at UK, US, we look at Japan, that's where a lot of these trends are already playing out. Japan has got a massive aging population problem, for example. And we can see how they're trying to tackle these problems, right? And I would say that Malaysia is still very much at the infancy stage in terms of where we are, in terms of not only the curve in terms of population or the curve in terms of climate, but in terms of what we're doing about these problems as well, right? So, I think, we've got a long, long road ahead. And I hope that in the future, there isn't just Bintang trying to tackle these problems, these very urgent problems. I hope that there is a proliferation of other impact investing firms who similarly recognize that there is both a responsibility to tackle these problems, but also a opportunity in tackling these problems, to create returns for your investors, for example. Right? So supply and demand, it goes back to basic economics, I think.
Okay. I think that's a good way to cap things off, which is and there are a lot of mega trends. I'm sure you guys can read more beyond what Johan has just shared, and it's really just about being able to identify these trends and being able to support businesses that can help sort of cater to these mega trends. How about Fuller, Imran? Like, where do you see this industry moving towards? Probably from a more adoption perspective, companies adopting ESG, and how do you see Fuller's role in this space, now and beyond?
For now and beyond, it's like we go back in terms of like our focus is to be the bridge when it comes into between intention and execution, right? So we're scaling through the different verticals, as what you mentioned before. Looking at the ESG from the lens of a risk. So that's what it is like. When we're looking on sustainability on ESG, yeah, looking at that. So like for us, of course, like we will continue when it comes into like scaling through the different verticals that we have through the academy on the capacity building, looking at the advisory, and of course like with the really exciting for the 360 that's coming up, and we'll drive it from there. So like in a nutshell, in 5 years, I would see like Fuller. We aim to be as part of the regional ecosystem enabler, working with investors, corporates, governments, and even other service providers and consultants to accelerate the adoption. So if we can make the whole ESG adoption 10 times faster and more measurable, we'll be able to unlock massive value for both capital and the environment, and of course the social aspects as well.
Okay, that's good. So you guys do have regional aspirations to just go beyond Malaysia and be supporting different stakeholders regionally, from government to companies, with your 3 product offerings. Okay, that's good to know. I think with that, I think we've come to the end of our webinar today. So please allow me to just probably just do a bit of a recap. We have talked about a lot of interesting points today. But I think some of the key points, at least that resonated with me, was, I think first of all, we started talking about basically what motivates investors to actually embrace SRI, or sustainable investment. I think it goes down to, of course, it is a real risk to investment portfolio, but also more importantly, having a heart when it comes to investment, wanting to make sure that where you put your hand into, you put your money into, is actually creating good impact to the world. And that's something that is not just isolated. It's happening more and more across the global landscape. Part of it is catalyzed by regulations, which we mentioned a number of it. And what that means is that regulations actually drive certain stakeholders to actually put pressure on people that they work with to be more ESG conscious. But also a lot of it is from just the impact that is within. That being said, there are still a little bit of gaps when it comes to companies meeting that expectation. And I think that's where Fuller plays a role, at least in this environment, is to help companies bridge the gap, right? To be able to not just figure out they have to figure out their own business model, make sure it's sustainable, and as part of that process, also figure out how they fit into the broader impact investing framework or ESG framework out there. And I think one thing that we talk about is that there are a lot of frameworks and resources out there. Fuller Impact being one of them, B Corp being another one of them, which can help companies to start internalize a lot of this complex topic much easier. I think to the audience that was asking the question earlier about start getting the first step probably is to check out some of these standards. It could be wordy at times, but I think the idea, the concept behind it can help you to actually figure out where to start, right? What are the areas to start? And if you need more help, of course, the Fuller Impact is always there, and you can reach out to them. I'm sure they're happy to give you some pointers on where to start. And I think we also talk a lot on basically when it comes to investors looking into ESG investing. It's not just all about impact investing. There's a spectrum of investors, and oftentimes for impact investors like Bintang, it's about finding a balance between a sustainable business model that can generate returns, as well as the return on impact that the business can create. And I think we also talk about, I think what basically when it comes to investors looking for investments, especially for Bintang, in terms of future outlook, it's a lot goes back to the fundamentals, which is finding some of these mega trends, which would be driving demands for different businesses, different impact businesses. I think Johan mentioned two key things, which is basically sort of climate change, which is erratic weathers, causing erratic weathers that could have implications on food supplies, food security, as well as aging population being putting pressure on sort of supplies or businesses to serve this aging population, amongst others. And a lot of investors, including Bintang, will be trying to find companies that can sort of serve can actually cater to this mega trends that's going to happen. And I think finally, I think from for Fuller's perspective, that for what you see, what Imran sees Fuller being in the next 5 years is actually to be able to support the regional ecosystem, and I think that's important because you do need a regional enabler in order to help to bridge the gap that we talk about, right? Expectations from stakeholders, from investors, for companies to adopt ESG, and we need someone to bridge the gap so that companies know how to apply ESG and how to plan and execute so that they can meet the expectations of the stakeholders. And I think Fuller's playing that role. I think right now mostly in Malaysia, but eventually, and I think you guys do want to grow to serve the region as well. I think those are some of the key points that I've at least resonated with me throughout this session. And of course, I'm sure that if you guys have any more questions, feel free to reach out to our speakers over LinkedIn. Can connect with them. I'm sure they are happy to sort of talk to you more and bounce ideas. And of course, finally, if anyone is interested to check out your first potentially sustainable investment, you can check out Fuller. Fuller is currently raising funds on Pitchin. They have also put up their SROI, sustainability SRI on the campaign page as well. So if you want to check out what that looks like, or try to get some ideas to implement for your company, you can check out the campaign page as well, and you'll find it at the bottom of the campaign page. I think with that, I'd like to thank everyone for your time. Thank you, Dr. Johan. Thank you, Imran. Thank you for spending your time with us right after you step out of the airport. Really appreciate that. And of course, thank you to everyone for spending your evening with us. Hopefully, today's session was helpful. And I'm sure I think the YouTube link should be up right after the webinar. So if you want to have a refresher or share with your friends, you can do so as well. And before I forget, let me just share it over on the chat. And with that, I'd like to thank everyone, and good night to all, and have a good week ahead.
Thanks, Nicholas. Thanks, Imran.
Thanks, Jan. Thanks, Nick.